Welcome to the deep dive. Today we're embarking on an in-depth exploration of healthcare intelligence. We're zooming right in on IQVIA using their second quarter 2025 earnings call and, the reports around it. Our mission here is really to pull out the most important nuggets of knowledge for you.
That's right. And our goal isn't just to sort of recite the numbers. We really want to understand what these figures are telling us, about the life sciences industry right now, how a leader like IQVIA navigates all this uncertainty, and where innovation is actually making a difference. Get ready for some hopefully genuine aha moments.
Okay, let's start unpacking this then. IQVIA, well, they absolutely delivered a strong second quarter. For the first time ever, they reported over $4 billion in quarterly revenue. $4,017 million to be exact, which actually beat the high end of their own guidance range.
Yeah, and revenue is up 5.3% year over year reported, but maybe even more impressive, 6.3% if you exclude the COVID-related work from both periods.
Right, that gives a clearer picture of the core business.
Exactly. And what's truly fascinating here is that even with the, volatile market, their adjusted EBITDA hit $910 million. And the adjusted diluted EPS was $2.81, both towards the high end of their guidance. And these adjusted figures, they're really important. They give you a clearer view of the company's core operational performance.
Stripping out some of those one-off items.
Precisely. One-off or non-cash things. It's like a more transparent look, supplementing the standard GAAP measures.
So what does this really mean for you, our listener? It kind of suggests we're looking at a company showing significant resilience and, well, growth, even in this tough global environment.
Yeah, it's not just about weathering the storm. It seems to be about IQVIA's strategic choices, maybe reprioritizing. It shows how focusing hard on market share, maybe even accepting some short-term margin impact, can be a powerful countercyclical move.
Okay, so with those impressive top-line numbers, let's peel back the layers a bit. Which segments are really driving this? Let's start with Technology and Analytics Solutions, TAS. That segment brought in, what, $1,628 million, up almost 9% year over year. That's pretty strong. Given what we've seen elsewhere, what's really behind that strength in TAS?
That is a sharp question, because TS really has continued to sort of defy the broader environment. A lot of the strength comes from clients' commercial strategies, roadmaps, and also new drug launches picking up pace. We saw double-digit growth in real-world evidence. That's about a third of the TAS business right there.
Okay.
And what's also key, I think, is that decision timelines seem to have normalized. They had slowed down quite a bit before, but now they're back to normal, so clients are actually moving forward on projects again. It suggests maybe a bit of a thaw in strategic spending.
Interesting. Now let's pivot to Research and Development Solutions, R&DS. This often gives us that forward look, right? Net bookings were around $2.5 billion in the quarter, which gives them a strong net book-to-bill ratio, 1.12. And here's where it gets really interesting, I think. Their backlog hit a new record, over $32 billion, growing over 5% compared to last year. But they still say the overall market environment is unsettled. How are they managing that growth?
Yeah, the unsettled piece is important. It reflects ongoing policy debates, drug pricing, reimbursement, especially in the U.S. It makes biopharma companies a bit hesitant about big long-term commitments. So how do you grow bookings and backlog in that kind of market?
Right.
Well, the R&DS team reacted by really intensifying their see more, win more strategy, basically expanding their reach, responding to way more RFPs, requests for proposals, and crucially, improving their win rate, especially in that emerging biotech and pharma segment, the EVP companies.
Those smaller, maybe more innovative players.
Exactly. Often more agile, too. We saw RFP flow grow low teens year over year and high single digits just quarter over quarter across all customer types.
That see more, win more approach, it sounds effective. Can you give us some, concrete examples of the wins?
Oh, absolutely. IQVIA is still a leader in oncology research, which is just a huge, complex field. A great example is their collaboration with Sarah Cannon Research Institute, aiming to speed up trial activation, boost recruitment, streamline data capture. They landed complex global phase 3 trials for colorectal cancer, 2 global phase 3 pancreatic cancer trials, and a global phase 3 MDS oncology trial. Big stuff.
Wow, okay. And beyond oncology, are there other areas showing real strength?
Yeah, obesity is another big one for them, highlighted by 2 global phase 3 obesity trials. And they're supporting a next-gen GLP-1 development program. Plus, we're seeing growing strength in cell and gene therapy. They were picked to manage a pretty significant gene editing program for Wilson disease. And they're specifically using AI-enabled solutions there for, speed and precision, which is critical in rare diseases.
So connecting this back, these wins and that strategy.
Right, it really shows IQVIA's ability to not just adapt, but actually gain market share, even when the whole industry is facing headwinds. It says a lot about their expertise, their data, their tech. It's kind of that classic flight to quality you see when things get uncertain.
Speaking of tech, you mentioned AI. IQVIA is apparently all in on the AI transformation, with NVIDIA supporting them. This isn't just buzzwords, though, is it? What does this actually look like for their clients?
No, it's far from vague.
Yeah.
They're actively developing these custom-built AI agents designed to streamline processes, enhance workflows, accelerate insights across the whole life sciences path. Use cases cover everything from early target ID, clinical data review, literature searches, market assessment, even optimizing HCP engagements. NVIDIA themselves actually showcased IQVIA's trial platform, called it a leading example of smart AI agentification.
That's incredibly fast development. But beyond the hype, what are the biggest challenges for them in actually scaling this? Scaling it across their whole business or even just staying ahead when AI is moving so fast?
That's a really critical question, because the momentum is definitely there. Everest Group named them a front-runner generative AI leader for life sciences, and they were the only CRO to get that top rank. But the challenge, yeah, it lies in consistent, large-scale deployment, across all sorts of different client needs, different regulatory environments.
Makes sense.
Internally, though, these AI efficiencies are already making a difference. They have this multi-agent system for literature review. It's expanded capacity tenfold. And patient journey analysis time, cut by 2/3, from like 12 weeks down to 4, with big cost savings. And they're developing over 50 more agents just for Q3. It's quite a leap, isn't it? From abstract AI ideas to tangible results like that.
Yeah, that's not just efficiency. It feels like it's fundamentally changing how drug development could work. And their tech innovation isn't just AI, right? They also got recognition for decentralized trials.
Yes, that's right. They won Best Mobile Apps for Patient Engagement at the 2025 MedTech Breakthrough Awards. Their app lets patients and caregivers join decentralized trials from anywhere, basically, while keeping privacy and security tight. And it has multilingual support across loads of regions. This isn't just about convenience, though. It really boosts patient access, engagement, retention, which are huge hurdles in research.
So, yeah, it really highlights how tech for them isn't just a buzzword. It's a real, tangible part of their strategy, delivering speed, efficiency, changing how clients bring drugs to market. Okay, let's shift gears slightly. Let's talk financials again, specifically margins. We saw some gross margin compression this quarter. What's the story there? Should we be concerned?
Good question. About a third of that compression was actually due to FX, foreign exchange, a tailwind, actually. Basically, currency moves boosted revenue, but didn't proportionally increase the profit. So it looks like lower margin percentage-wise.
Well,
The other 2/3, that was down to product mix. Higher growth in real-world evidence within TAS, which tends to have lower margins. More data aggregation, maybe less deep IP involved sometimes. And within R&DS, a higher proportion of pass-through revenues and FSP revenues, functional service provider stuff.
FSP, that's like staff augmentation, right?
Pretty much. Where the margin is tighter because IQVIA isn't taking on the full project risk or, the deep IP integration. But importantly, strong cost control on the SG&A side, selling, general, administrative costs, that helped offset a good chunk of this. They expect this kind of mix to continue for maybe the next couple of quarters, but the FSP part should decrease over time, so it looks more strategic than like an operational issue.
Okay, that makes sense. Beyond operations, they were busy managing capital, too. Repurchased $607 million of stock in the quarter, over $1 billion year to date, and their net leverage ended at 3.61 times adjusted EBITDA. What does that signal, given that unsettled market you mentioned?
Well, it tells us quite a bit, I think. Well, the market's still unsettled because of policy stuff. Clients are increasingly getting on with their programs. You can only delay critical phase 3 trials for so long, right? Especially the data looks good. So it suggests the environment, while maybe not totally normal, is showing some, let's say, green shoots. Decision-making is moving forward. And the share buybacks. That signals management believes their stock is undervalued. And it shows commitment to returning value, even in this climate.
Okay, so if the market is still tight, though, how's that playing out with pricing? Are competitors forcing IQVIA into big price cuts, or are they navigating that differently?
Yeah, that's an important point. Some competitors are pushing prices down. IQVIA's see more, win more approach means they're aiming to be at the table for every opportunity.
Yeah.
And right now, they seem more willing to accept some short to medium term margin pressure, aligned with lower price levels sometimes, if it means winning the business and building that backlog rather than just walking away.
So it's a strategic choice. Prioritize top-line growth and market share right now.
It's a bold move, really, to solidify their leadership. But, it does raise the question, how long can they balance that before investors start looking for margin expansion again? It's also worth noting, though, cancellation trends are back to normal historical ranges. That's a positive sign for overall market stability.
Right. Okay, finally, they updated their full year 2025 guidance, now expecting revenue between $16.1 and $16.3 billion. Adjusted EBITDA, $3.75 to $3.825 billion. And adjusted diluted EPS between $11.75 and $12.07. What are the key assumptions behind that updated outlook?
Okay, so that guidance includes things like a $100 million step down in COVID work compared to the previous year, 100 basis point FX tailwind, so currency helping a bit, and about 150 basis point contribution from M&A activity. They also expect their business and consulting segment to get back to high single or even double-digit growth by the end of this year or maybe early next, which if that happens would be another pretty significant indicator of broader market confidence returning.
Wow. What a dive into the details. We've really seen how a global leader like IQVIA is navigating a pretty complex market, delivering record revenues, using cutting-edge AI for efficiency, strategically adapting its approach to win business and build that huge backlog. Even with all the uncertainty from policy or pricing pressures, it really is a masterclass in strategic agility.
Yeah, and understanding these kinds of detailed insights, especially from a company right at the forefront like IQVIA, it gives you, the listener, a really unique perspective on the health of the whole life sciences industry. It's definitely not just about the numbers themselves. It's about the strategies underneath, the market dynamics, the innovations driving it all.
So as you reflect on this deep dive, here's something to think about. Considering IQVIA's big commitment to AI and that aggressive win more strategy in this complex market, how might that shape the future landscape, not just for them, but for clinical trials and commercialization across the entire biopharma industry over, say, the next 3 to 5 years? And, what opportunities or challenges does that create for everyone else playing in this space?